Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. Is starting your trading journey with day trading a good idea? One may trade with different holding periods, long-term investment, position or swing trading. Day trading is the fastest one. Is it for you? Many novice traders think they can make a lot of money quickly using day trading. It does not need much capital, and what is so difficult to buy and sell? They may think looking at intraday charts after the chart has been plotted for the day. I would have bought it there, I would have sold there, I would have made a nice profit. Easy, they may think. When and if they paper trade, it seems to all work well. The reality is different though, and the reality strikes them once they start to day trade with real money. What instrument to use for day trading? Forex, futures, stocks, or options? To make easy money, higher leverage instruments may seem to be the perfect choice. Forex, futures, buying naked call or put options. New traders soon find out that leverage does not help them. It only hurts. By the time they realize this, they lose a good sum of money. Not uncommon that such traders would trade, say, futures first, lose money and try options, and lose more money and try forex, and lose a bit more. The challenge is with leverage. It is like driving a supercar. Without learning to drive a slower car, driving a supercar on a racing track is probably going to end in only one way, and that ending is not pretty for the supercar, not to mention about the driver. A similar challenge is with the interval. At 5-minute intervals, charts are more random than daily or weekly, much more so. If one has not traded profitably with the daily charts, it is going to be hard to profit from the intraday charts. You could probably replace hard with impossible if you would like that. I like to say that unless one has made consistent profit swing trading stocks, not a leveraged instrument, one may not be ready to day trade and profit from that. However, once you pass through the swing trading profitably with stocks, you may try out day trading, provided your lifestyle allows that. This means that you can track the market during trading hours without being distracted by other aspects of life or work. The larger the trade size or the more leveraged the instrument is, the more undivided attention is needed. Even for day trading stocks, not a leverage instrument, the requirement of focus and attention is quite high. I do day trade sometimes and do it profitably as much as swing trading stocks. I tend to stick with stocks for day trading. The non-leveraged nature suits me. Q has a specific chart for day trading using intraday intervals, precision entry or pivot chart. It does not simply change the daily chart's interval for day trading. That helps in precisely entering and exiting the trades. The pivot chart mainly relies on support and resistance levels that have zero lag, and a few indicators that are super fast, almost zero lag. I do not simply open any instrument on the pivot chart and start day trading. I have an idea using Q at a glance, weekly, daily, and Q 360 degrees analysis, and pertinent substantive news, which stocks I may short and which ones I may long. For example, I may like to short IWM if it stopped at a memory trendline resistance the previous day, and next day using the pivot chart enter the trade precisely. This is how IWM could be day traded last week. I shared in one tweet that it stopped at the trendline resistance, and therefore next day would be the proper day to try to short it as it reversed from the trendline resistance again. Using the pivot precision chart makes the stop narrow. I tend to book partial, half or two-thirds profit once the risk distance, which is narrow, is covered, and then put the stop for the remaining position. Once a trade is safe like that, I may look to enter the next trade. For me, the day trades tend to hit initial profit target or the stop loss within somewhere between 15 to 30 minutes, sometimes even 10 minutes or less. That is due to the very narrow stop of the trades. And I'm able to take such narrow stop trades because of the precision entry pivot chart. I recently day traded Tesla, gap short day trade, Apple, also a gap short day trade, and IWM using the daily memory trendline resistance where it stopped the previous day, among others using the same precision entry techniques. And they turned out to be profitable. If any trade is not profitable, that would not be a big concern for me as the stop was always narrow relative to the target. Are you thinking of day trading? If you want to do that profitably and consistently, you may keep the above in mind and keep an eye on my public sharing of day trading tweets, posts, etc. They are meant to share the techniques and not meant as trading tips. Day trades are too fast to follow another person's tweets and trading profitably on that. Greetings. I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets with only a single trading system Q that I developed myself. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. It has multiple components. I will use several of them today. Instruments that often move the market. Dollar index, it tends to impact the market, though the inverse correlation does not always work. In the weekly, dollar index went up, however, closed with bearish backdrop color. In the daily, it went up from the yellow direction line support. In the last market recap, I mentioned about this support and I also mentioned about the trend line resistance. saying that it could move either way. Now it has broken above the trendline resistance with a bullish traffic light candle, which also has bullish flow signal. Though the candle has an upper tail, looking at the trendline resistance break and the flow signal, I am more inclined to think that it will go up, though it could also go down. I think that probability is less. I'm thinking it may go down because it did not close with a bullish shaped candle. I think it is more likely that it will go up, and if that happens, that will put pressure on the market. Mega cap index, this is what I shared in the last market recap. And this is exactly what I said. I pointed to this area, and this is exactly what I said. I will not buy now at watermark resistance. If it creates a false upside breakout, I may short some mega caps. Did it create the false upside breakout? Mega cap index this week. First thing to note is that it outperformed the market. Closed with bullish color candle, though the candle has an upper tail. And the interesting thing to note is that it indeed created a false upside breakout at the weekly watermark, and also created the false upside breakout at the daily watermark, closing below the watermark resistance. Along the way, it displayed a bear release signal and a bearish indecision that came on Friday. Looking at the false upside breakout, the indecision and the bear release signal, I'm thinking that it is more likely to come down from here, and I'll be happy to short if this trend line support not far from Friday's close can be broken. Beautiful, isn't it? The anticipation of false upside breakout came true, and I used that anticipation to day trade a number of mega cap stocks using pivot precision entry chart. That is how I get ready with a concept of either trading on the long side or on the short side, and when something comes true that I anticipated, I can take the trade with confidence, and always with a very narrow stop on the 5-minute precision entry chart. Market breadth. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market. Percentage of stocks above 50-day moving average, the yellow line shows that the market is still having a recovery in a downtrend. It is not in an uptrend. The other thing to note is that though market went up here, had a gap down open and went up again from there, it had no accumulation count whatsoever. And also note that though Friday price came down, there was no distribution count too. This is the total view using at a glance chart that I shared last week. And this is exactly what I said. Bullish and overbought. A false upside breakout may give lucrative shorting opportunities. Did the false upside breakout happen? Mega cap, why mega cap index? Did I mess up again? Why mega cap index? Okay, good. That is a time to switch to the live system and get the at a glance chart of total view index. Getting that on the other monitor. Give me a second, please. Sorry about that. Sometimes I mess up the slides. I don't know how it happens. I thought I double checked. Never mind. Let's see if we can open the total view index. Total view custom index using weekly daily. Weekly backdrop color is bullish, though the shape is indecisive. In daily, it gapped down on Monday and then recovered, and you can see that at this and or this watermark level, it indeed created a false upside breakout or something very close to a false upside breakout. In addition to that, on Friday, it broke the trendline support. That tells me that it is more likely to go down from here than go up. And if that happens, I'll be happy to short. This chart does not allow me to buy. Back to the slides. Nasdaq and NYSE breadth. One thing to note is that in terms of percentage of stocks above 50-day moving average, Nasdaq is underperforming NYSE, and the same is true for the other oscillator 3-month new high low. I thought it was interesting to notice that because we saw mega cap index is outperforming the market, but Nasdaq is underperforming, meaning technology stocks are not following through with the mega caps as it used to happen earlier. Major indexes, I noticed that Russell 2000 and S&P 1500, the two broader indexes here, are underperforming in terms of 50-day moving average and again in terms of 3-month new high low. Russell 2000 is the worst performer. That again shows that broad market is weaker than what is apparent from SPY and QQQ charts. Market external view, this is how most people around the globe see the market. Other than DIA, all the other market ETFs came down this week and QQQ became the worst performer. Again, I thought that was interesting because custom mega cap index outperformed, but QQQ, which is heavily influenced by the mega caps, underperformed. Doesn't show the strength of the market. In spite of the mega cap custom index outperforming, other than DIA, which is a very small index, everything came down. Let's look at the market ETFs from the worst performer to the best performer, QQQ. First thing to note is that it underperformed the market. This ETF closed with bearish color in weekly, though the shape is indecisive. Friday's candle shape and color both are indecisive. It stopped right at the trend line resistance, memory trend line, tough nut to crack, and it is inside a triangle pattern. If it comes down from here and breaks the first trend line resistance here, I'll be happy to short. Currently, it does not allow buying. SPY, unlike QQQ, it closed with bullish color in weekly, though the shape is indecisive. Looking back, I noticed there was a bearish headwind at this point. If price comes down a little bit from current level, it will honor that high of the bearish headwind candle. That is what often happens after bearish headwind. Price may try to go up, create some kind of false breakout. It did create a false breakout already at the watermark resistance level. Then it may come down. The trend line support is some distance away. In daily, it already created false upside breakout. Friday's candle color is bearish, shape is bearish, and it broke the trend line resistance. Sorry, broke the trend line support. What am I saying? Broke the trend line support. Next support is far away. So this one allows shorting immediately. QQQ, I would be careful because a support is nearby, but SPY has no support nearby, allows shorting right now, does not allow buying. IWM, weekly indecisive shape, bullish color. Notice that though SPY and QQQ were near the all-time high, near the previous all-time high, IWM is far from the previous high. It is the worst performer of the market ETFs in the weekly interval. In the daily, it displayed the bearish indecision cluster. I always take them seriously. On Friday, it reversed at the trendline resistance. This is the trendline resistance. Support is far away, does not allow buying, clearly allows shorting. Why I mentioned that you could trade IWM using pivot chart on Friday was because on Thursday itself it closed at the trendline resistance, and I tweeted about that on Thursday itself. Let's look at the tweet on my Twitter page, Superior Profit. This is what I shared on 30th January. That should be Thursday. Yes, Thursday. I mentioned that in the previous weekend recap, I showed the ice hole failure in IWM here and mentioned that it would be a possible reason to short it. Today it is showing another ice hole failure. That was Thursday. But you can see the momentum chart, candle color was still green. Ice hole failures are not enough to short an instrument in Q techniques, but today, that is Thursday, it was also reversing from trendline resistance, and that was visible from the Q entry chart. It reversed from the trendline resistance after indecision cluster. So looking at that Thursday's pattern, Friday you would be ready to short it, and using pivot precision entry chart you could short it with very narrow stop and book profit within about 10 minutes or so. And you could let profit run on the remaining position. That would generate much higher profit because it closed much lower from the entry point, which would be near the trend line resistance. Lastly, DIA, this is the strongest market ETF of this week, the only market ETF that is up for the week. I notice once again here also we had a bearish headwind in weekly earlier. This week's color is bullish, shape is indecisive. If it goes down little bit from here, it will create a false upside breakout at the high of the bearish headwind candle. That is not uncommon. After bearish headwind, price tries to retrace that price level and reverses from there. Interestingly, in daily also we had a bearish headwind. Price came to the same level or very close to that level, reversed there with a bear release signal and a bearish shape candle. And though dia is the strongest for the week, interesting thing, and all these things come to your notice as you read the chart carefully, the gain was really on Monday. After that, it moved sideways. In fact, Friday's close was lower than Monday's high. And other than Monday, it actually started underperforming. So currently it is underperforming the market for the last couple of days. It has a bear release signal and very useful to notice that a bearish reversal candle at price extreme high. That does not say well about buying. I would like to short it instead of buying. Bucket analysis, amazing tool thanks to Dr. Jeffrey Scott. After watching whose videos I started using it. Pinpoints reversal points with, it is probably worth circling this word remarkable multiple times. Proof of pudding is in eating. Remarkable accuracy. A snapshot from my tweet on 21st January around 10 a.m. EST. Using 100% real-time bucket analysis, I showed it was too overbought and said it was likely to pull back. This snapshot is actually from a tweet of 21st Jan. Why it was too overbought? Percentage of stocks above upper Bollinger Band was 37.6%. Whenever it is at 30-40% level, it is overbought so much that a pullback is likely. And also in one day, the percentage of stocks above upper Bollinger Band jumped from 22.8 to 37.6%. It's more than 10%, well above 10%. Notice interestingly, the market was very bullish, but using bucket analysis, I could pinpoint the reversal. Notice the percentage of stocks above upper Bollinger Band, 37.6 on 21st Jan. And I projected that a reversal was going to come. Works like a clockwork, so I'm not never afraid of projecting that. From 37.6% above upper Bollinger Band, where is it today? Only 3.1%. Amazing, isn't it? From 37.6 to 3.1. About 34 percentage of S&P 1500 stocks. A huge number of stocks. 34 percentage of stocks came down from upper Bollinger Band. That would give lucrative shorting opportunities at the top. Some of them would be attractive day trading opportunities also, and shorting from the top signal was also there from technical breadth. I'll come to that shortly. The market is still bullish because 66% of stocks are above mid Bollinger Band. However, Friday was very bearish. You can see the percentage of sectors, industries and stocks that are down. And also on Friday, all the sectors were down, and I circled the sectors that were down by more than 1%. They were infotech, energy, consumer discretionary, com services. All of them probably considered as non-defensive sectors. The defensive sectors also came down. Non-defensive sectors, these four came down by more than 1%, and two of them, energy and com services, came down by more than 2%. That was a very bearish day. What can we expect going forward? Sector industry stock breadth shows where the market came from, where it is now, where it may go next. Last week, this is what I shared, and this is exactly what I said. It is still bullish. Why? Because last week the 5-day period was still green. I said it is still bullish, but the bullishness is reducing. That allows looking for short trades. How did it turn out this week? Now this week has turned bearish. My last week's analysis was useful, aka profitable. Now we can see longer term 1 month period is still bullish, 10-day is also bullish, but 5 days has turned bearish, and 1 day Friday is even more bearish. Now people may be saying it is looking bearish, but 1 week ago itself, looking at the sector industry stock breadth and also other signals, I anticipated a market pullback that came true. And when these anticipations come true, you not only get psychological kick, but you also are able to make a profit, a decent profit from that anticipation. Technical breadth. Again, last week, I mentioned there were other signals in Q analysis last week when the market was looking quite bullish in sector indices stock breadth, and also you can see in last week's technical breadth, this is last week's picture. Overall, most of the signals were bullish in weekly interval, but headwind is a unique reversal signal. When the headwind alert comes in technical breadth in the weekly interval, I tend to look forward to a pullback. Notice the percentage of overall setups that were bullish 1 week ago, 72%, very bullish, but I used headwinds to project that it would come down. Now from 72% bullish, it turned 62% bearish. That is a huge reversal. Again, that is the value of the comprehensive Q360 degrees analysis. You and I can anticipate something, and when that comes true, we don't have to second guess, we don't have to look at news about tariff and all. That happened this week. But I could be ready and trade based on an anticipation that was coming true without thinking too much about the news, though I do look at the news using real-time icon, and I make good use of substantive tentative news, as you have seen before. Now weekly interval is bearish across all categories, does not allow buying, only allows shorting, and daily interval, again all categories are bearish. Is it too oversold? No, because most of the bearish setups are still coming from price extreme middle, not from price extreme low. So it is not oversold, though the percentages themselves are looking to be above 80% across all categories, but it is not oversold because of this other analytics. And on top of that, now the headwind alert has come in the daily interval. It's more likely price will go down from here than up, allows shorting. Market level summary. The most important trading decision is whether and where to buy or short, or whether to stand aside, and it is a culmination of all the analysis that I went through just now. Market level summary. My last market recap conclusion was this quote: the lower risk entries are less likely to be on the bullish side. If the market drops from here, there may be many low risk entry and possibly lucrative at the top shorting opportunities. That was my last market recap conclusion. That turned out to be useful, aka profitable. The market is now more bearish across all the Q analysis dimensions. I would rather short than buy stocks. Simple. This week don't have to explain much. The analytics speak for themselves. I would rather short than buy stocks. Review of last week's trade ideas. Last week, I was not sure where the market was going to go, though my preferred shorting. I also noticed that communication services was strong sector, so I shared one shorting idea, HON, Honeywell, and one buying idea, income services. Honeywell was industrial stock. The buying idea was Iridium, IRDM. And I mentioned in the last market recap, I did not hold any of the trades. Let's go to Honeywell first. I did not trade it during this week. It moved sideways. This was last Friday when I identified the flow trend following short setup. This was the week. After that, you can see it moved sideways. On Friday, it reversed down from the trend line resistance, almost from the trend line resistance. Again, that would be a precise day trading opportunity too. I did not take the day trade. I did not take the swing trade. If you took the swing trade based on last Friday's analysis, you'd still be in the trade. The weekly color is bearish. The market is looking bearish. I anticipate it to come down rather than go up and stop one out. However, as of Friday's close, there is no short setup. If you shorted 1 week ago when the flow setup came, you may be still in the trade because it neither hit the stop nor hit the target. The buying possibility was Iridium, IRDM. I identified the buying idea as a breakout on this day. I mentioned I was not holding the stock, and I also mentioned that I don't like to take such breakouts at the time of the breakout because the stop loss is far away. So I did not trade it the first few days of the week. On Thursday, let me go to at a glance. On Thursday, I noticed that it pulled back enough and stopped at the watermark support where a large bullish indecision cluster came earlier. So on Thursday, I took a long position using stocks, deciding to stop out if price came below that day's low using Q protection level, of course. And see, I did not take the trade as a breakout trade because stop was far away, but my analysis was still bullish. So when it pulled back and gave me a low risk entry point using the watermark support, I took the trade. And on Friday, initially price went up. The stock, my position had about 1.5% profit. However, market pulled back after some news on tariffs apparently, though it does not look like that the tariff news massacred the market. It just pulled back in quite organized way. There was no distribution count, we saw that. But in any case, all the dimensions were looking bearish, turning bearish, and also this stock was not closing with a bullish color, not even with a neutral color. So I had a small profit in that stock. I closed the position because of my market view changing to be more bearish. Disciplined trading. If you keep doing that, I find it difficult not to make a profit overall. This week's trade idea, shorting, isn't it? So let's do a proper top-down analysis. And I will show how simple it is if you want to make it simple. Starting with Q edge, let's go to the industry scorecard, pure top-down analysis. I am shift clicking the bull signal here. That will show me industries that are both strong and accelerating. If I did not click the shift button, then it would be or strong or accelerating. If I do shift click, it is strong and accelerating. Let me drill down into the S&P 1500 stocks, a nice mix of large cap, mid cap, small cap. Did I click bullish? Let me go back. I want to look for short trade. So I'm going to go to the industry scorecard. By mistake, I clicked the bull symbol. I'm going to click the bear symbol now. and I shift click, so it gave me industries that are both weak and decelerating. Drill down into the S&P 1500 stocks, find stocks that are down by at least 1%, at least 1 star bearish, that is either overvalued here or with negative earnings growth like this. Make one click more to find stocks that may be having proper trade setup. Starting with 1500 stocks, I am left with only 5. Was it difficult? Was it time consuming? No and no. And I looked at this chart, the chart that looked best to me for shorting among this list is MSC. It has a flow trend following short setup and it has a fan out pattern. Now is the time to open the chart and look at it using weekly daily. Let me open the weekly daily, drag it here. Let us read the chart. Has a trend following short setup, lower high, lower low, went up and tilted down right from the trend line resistance. In fact, it gave a short setup on Wednesday too. If you were watching or running Finder or doing that few clicks, few seconds, maybe less than 1 minute analysis, you would find it on Wednesday, you would find it on Friday too. Weekly is bearish color, bearish shape, and also coming down from trend line resistance. That is a clear shorting opportunity. And let me also show you the expert commentary. If you are new to the systems, probably you are not if you are watching this video, you can read the chart like I would do. In the setup analysis, it shows it has a flow trend following short setup. In pattern analysis, it shows it has a bearish fan out pattern. And further, if we go down, we'll see more and more red colors only. So anyway, it has a proper short setup. Why not we look at its vital one-page scorecard? I did not have vital open. So on Edge, on the home page, if I click this button, that is move to vital or travel to vital, it in fact opens the vital program and takes us there. So I clicked it, it is opening vital. Let's look at the one page scorecard. We already know that it is weak either in terms of valuation or in terms of growth. Now is a good time to look at its one page scorecard. Let me make sure it's not MSC, it is MSM. So I typed the wrong code. It is should be MSM. And here you don't have to enter the definitive code. You can enter the ticker symbol. It will look up the definitive code itself. So this is MSM, Trading Companies and Distributors Industry. Negative earnings growth allows shorting. Also you can see it is reducing earnings growth for longer term. Revenue growth is also negative. Insiders are not buying. Funds are not accumulating. 72% of peer stocks are down. The stock is down over 1 day, 2 day, 5 day, 10 day, steadily coming down. Earnings is some distance away. No harm shorting it using stocks. Some distance away. And if I look up the industry score using one more click, we already know it is one of the weakest and one of the most decelerating. That is how we started the top-down analysis, and it is indeed that one of the weakest, one of the most decelerating. So that would be my trading idea for this week. MSM, short candidate. Was it difficult or time consuming? I would think no. If you carry out the 360 degrees analysis like that, you will most likely find other trading candidates today, just as you would almost every other day. Thanks a lot for attending. joining me today. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as this live example, so I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.